Today, the whole world is facing chip shortage. Whether it is mobile phone, whether it is electric cars, any equipment that needed computer chips are facing this short of supply. So let's zoom in into the 5 undervalued stocks that we can explore to take advantage of the market opportunity. So let's go into Guru Focus and type in Micron Technology, ticker symbol MU, and then you will be greeted by this screen. Type on DCF, which stands for discounted cash flow method, right? DCF, discounted cash flow, and they are using the earnings-based DCF, right, to determine the fair value of Micron. And let's see whether it is fair value, whether it is undervalued under Guru Focus indicator. So once you type in, we have seen that the fair value here is $76 and there's a margin of safety of 8.76%, right? So it is good to go according to Guru Focus. Now, as you scroll down, you can also see companies that are in the chip industry that manufacture chips, right? Some or rather the company will involve in chips. So you can see MU here, and you can see MC, HP, you can see Skyworks, you can see Qualcomm, you can see Intel, Nvidia, and all those, all right? So very easily when you look across this row, right, and the predictable rank, Guru Focus has actually shown us, how many stars is Micron, right? So according to GF, Guru Focus, it is 4.5 stars. Based on DCF earnings, it is $76, and the margin of safety is 8.46. Now, if we look at the margin of safety against other ticker symbol, okay, the next one will be a 52.45 margin of safety, which is Skyworks, all right? And then we drill down further, Intel 52%. So all this high margin of safety is for us to consider to see whether it is really undervalued so that we can invest in it, all right? Whether it is stock investing or option investing. We drill down further on the various company, and you can do that yourself, right, in your own free time to look at the rating provided by Guru Focus. Okay, Nvidia, as you can see, is a very strong momentum stock. It's having 3 stars, but the margin of safety is only negative 111%. Okay, so you should be a little bit worried about that. Same thing for Broadcom, 166 margin of safety. All right, then we look at the Korean company SK Hynix, which are doing chips as well. It is having a 15% margin of safety. All right, so another way of looking at Guru Focus value, okay, what I was discussing just now is DCF earning based on discounted cash flow. All right, and the discounted cash flow is based on this chart here, right? I have shown you in the previous video before. If you have forgotten, please go back to the video. So basically, in summary, it is a growth stage for 10 years with a growth rate of 5%, and then the terminal stage with 10 years again with a growth rate of 4%. You add these two together, it will give you $476, which having a margin of 8.76%. All right. Now, what I'm going to show you here is actually quite interesting as well, because not only you can find the DCF earning base and the margin of safety, you can also look at the PE ratio. For instance, Micron Technology PE ratio is 13.51, which is great because anything that's below 15 is considered an undervalued stock if it's a growth company. Now, so all these are based on DCF earning base. Now, if I mouse over MU, you can see another chart comes up. And here it gives you the GF value, right? The GF value here stands for Guru Focus value, and it says here that if you look at a blue line is the price, the dotted black line is the GF value. So at this point in time today, all right, it is having a 0% here, which is a fair value, right? Anything that's under 10% will be really, really undervalued, and minus 30% will be really significantly undervalued. So this is how you pick the charge for Guru Focus. So you can go down and drill down also for other ticker symbol as well. For example, AMD, we want to look at what is the GF value. Okay, you can see the GF value is a little bit high. It's actually plus about 20% already. Okay, and this doesn't show you the DCF value. You have to type in yourself, right, in the diagram above, and then you will do the pricing of the DCF value based on cash flow, right? So what you do is that you key in here, right? You key in here AMD, and then you'll find the DCF value, right? You find the DCF value. You key in here, you click DCF again, and you find the DCF value. Okay. Now, I'm going to scroll very quickly into all the others that are undervalued. Skyworks, for example. Okay, the price now is at 169.84, which is on the dot. All right, fair price value. You can see the DCF on earnings base, not on cash base. Sorry, just now I make a mistake. The DCF is based on earnings base. It's at 357. So today the price at 169, again, it is undervalued according to DCF, right? But according to GF value, it is nearly on the dotted line. Okay, fair value. So this is how you look at it. Now the other way I look at it is that I look at TradingView again. Okay, and TradingView, as you can see, like just now what I've explained, Guru is about 76%, $76 fair value, right? As I've mentioned previously, giving you a margin of safety of 8.76. Now, other companies like Morningstar, right, using the PAC ratio, indicates that you need a 15% EPS growth to have a $70 fair price. So today the price is at about 69.58 as of yesterday close. Post market reading is 68.2. So you need to have a 15%. So you must ask yourself, will Micron, right, on the next quarter, on next year, have a 15% growth? If the answer is yes, then your MS PAC value ratio having a fair price of $70 will be a good indication, right, for you to enter. Okay, so I've also mentioned here all others parameters, fundamentals values are okay. JITA gives you a value of about $94, which is about 28.24% under the JITA line. All right, so JITA, as you can, I've also mentioned in other posts before, you click on JITA, you go to MU, all right, and the price will be, you see the price here, it's 27.46 under the JITA line, all right? So the price is about $70, okay, fair value. So this is how you compare, you know, different company assess of fair value, and then you make sense of yourself of all this indicator and go in when you are very comfortable with the stock and valuation. Okay, so this is for MU. Now this is the first stock that I have mentioned. There are 4 other stocks. The other 4 stocks are, which I like, all right, personally, are second one is Skyworks. Okay, Skyworks. I have also did some homework on October 26. Okay, for Morningstar PAC, it needs a growth, EPS growth of 19.6% to reach 165. Guru DCF earning, which is way over 357. So you have to assess the validity of this. 357 based on DCF earnings according to Guru, and JITA having a jitter score of 7.5, give you a 49.62% over. Fair value price is at 81. All right, so this is Skyworks. What about Qualcomm? Okay, Qualcomm, let me see where is the right. The indicator is here. Okay, so this is the work I've done on October 26. Right, I'll always actually type the findings here so that when I revisit Qualcomm again in the future, I will know, okay, on October 26th, I have this assessment. So it is a faster way to assess the ticker symbol. So Guru, I didn't put any number here because it was not indicated in the chart, but I'll find it out when I have time. Jitter give you 102.6 as fair value, right? And then the Morningstar pack, right, give you 319, right, $319 based on a 3-year EPS. But if you have a 16.5 EPS growth percentage, the fair value will be 132. So again, this is for you to assess again. Now, take note also that the earnings are very near. So if you want to do buy call, right, or please be careful, take precaution. If you want to buy stocks, there's no problem, right? So so the next one is Intel. Intel is way undervalued because it has just recently dropped after its earnings, even though the earnings is pretty good, right? But it is because that AMD has taken over some of its market share. So as usual, these are the reading. Jitter give you $73 fair value, which is 34.3% under Jeta 9. Guru give you $100, margin of safety 52%. Microsoft PAC growth ratio give you 48.46, right? Using the lowest 10-year EPS percentage average, okay? If you use the 10 years. If you use the 5 years, it still gives you 83, all right? So basically, if you use to have a fair value of right now $48, probably is a EPS percentage growth of about 9.5%. So if you think after 1 year, okay, from today, if the EPS percentage growth is more than 9.5%, then maybe you can go give Intel a go based on Morningstar. All right. So let's get back to the PowerPoint chart. And so the last ticker symbol I'm sharing with you today is called SK Hynix. And this is a Korean company. So you can't trade this with Think or Swim, with Tiger, or even with Momo. The only brokerage you can trade with is Interactive Broker because it is international. So as you can see from the chart, again, this is from Guru Focus, right? The GF value is undervalued nearly about minus 20%, right? And you can see here the price is about 100,000 K won now, okay, and it is undervalued. So this is one of the chip manufacturer in Korea, very popular one. I think SK has acquired over Hynix some time ago. So if you like this posting, please share with your friends. This is my last slide, and please enroll in the course, right, to learn about value investing, to learn about how you can find fair value price so that you have more confidence and convictions when you're doing stock investing or even doing trading, right? Like I say in my previous posting, if you actually do trading in value stock, you stand a very high chance of making more money, right, in the long run. Again, it is less than $30 for 1 month access, and more importantly, it comes with IWH mentorship and support group. Not many of the trainers in the market give you that, and with this support group, you'll be linked to the support group where you can ask any question, how simple it is. You can ask any questions and I will be the one answering it to lead you to understand the system, have more knowledge on investing, and of course, very important to have consistent passive income. You can also choose to have a 1-year access with US $197, which represents a 45% discount. So hurry up, get on board because I'll be giving you I will be launching a new package pretty soon, which I may increase the price. Okay, so again, if you like this post, please subscribe if you are viewing it in YouTube. Share to your friends, like it in Facebook. And this is Charlie Wong from Investing for Wealth and Happiness. I wish you all the best. Happy investing. Take care. And I shall see you soon. Bye-bye.